Okay, good afternoon, everybody. This is Friday, October 27th, 2023. It's your weekly take on the market. I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. I don't make buy, sell, hold recommendations. Nobody at IBD is licensed that I'm aware of. Okay, so we'll talk about the market. Lots of thoughts there, the overall market, big picture, so to speak. Then we'll look at the industry groups fairly quickly, and then stocks to watch. There always seems to be a lot more there that I think the story is always in the underlying stocks. The indexes are becoming tougher and tougher to interpret because of the way they're construed. At least that's the way I think, anyways. So here's the NASDAQ, and then here's the NASDAQ breadth, the advanced decline line. Gary Kaltbaum tweeted this chart, and what a story it tells. So basically, we've been in a bear market, really. If you have to label it, and the good news is I don't have to, and most people don't have to, but it hasn't been a great market environment for months and months. There's just not a lot going up. In fact, most stocks are going sideways to down, as you can see by this chart, and just plumbing new lows. And eventually, based on history, what happens, and starting to see it now, is the weight of all those stocks as the market gets more and more narrow. It's like a house of cards, like a pile of sand. Eventually, all it takes is just one little pebble, and the whole thing comes down. And we're starting to see that now. It's just been too difficult for Tesla and Nvidia and Microsoft and Meta to hold up the NASDAQ. They've done a great job most of the year. It looks like they've kind of lost. They don't have quite the same strength that they would, right? If you're bench pressing 400 pounds, I don't care how strong you are, you might be able to do 1, 2, 3 reps, but at some point you're just going to tire, and the weight's going to collapse on you, and that's kind of what's happened. Here's the Magnificent Seven. The market cap is as high as it's ever been. B of A. What are the Magnificent Seven? They're down below Apple, etc. And it's and just because it's high doesn't mean it's too high or can't go higher. I mean, you probably would have thought in 2017, 2019, 2022 that it was too high, and you had like a bit of a correction, and then making new highs, almost because they went up a little, but the market stopped, overall stopped going up, and so they just only had a like relative strength. I don't know what it means. It just means there's just not a lot of merchandise. And so when there's not a lot of merchandise, it's each mistake you make is magnified. In a bull market, there's lots of merchandise, and you can buy wrong, you can hold on wrong, you can sell wrong, and kind of get away with it. The US and large cap stocks in particular just dominate everything. So the largest 10 stocks as a percentage of the MSCI All Country World Index, going back to 2003, highest it's ever been. And US stocks, they dominate the global markets as a percentage of the All Country World Index, just over 60%. What does that mean for you or me? I don't know. Nothing yet. I think you want to be flexible and open to the fact that the next group of leadership could come from anywhere. It could come from different countries, different groups. That's usually how it works. So that's probably the only thing I would read into this. We do have a lot of clients overseas. See the emails. I've seen them on phone calls and Zoom sessions, and a lot of them tell me they trade U.S. stocks because of the depth of the U.S. market versus their local markets, which is funny because our depth, as measured by breadth, is getting worse and worse. But there was a podcast I saw, and it's a UK podcast. Let me see if I can find it because I don't want to get the headline wrong. anyways, they've lost, I think the headline was they've lost 70% of their companies since 1996. So they're just less and less stocks out there. The companies, I don't know if they're just not going public or if just not that much innovation anymore. As companies are getting bought out, there's not this new to replace them. I do see it in the IPO market. I feel like the IPO market has really changed since I've gotten in business. Before, it was a place to raise capital to grow, eBay, Microsoft, Google, uh, on and on, where they go public and they actually trend for a long, long time. I just can't remember the last IPO. Maybe we'll pull up a few, but like Snowflake, for example, is a good example of a stock that at the time it went public, it was just priced to perfection. Not that I think that, just the market voted, right? Stock hasn't done anything. And the market cap was so huge by the time they'd gone public. And in 20 years ago, that wouldn't have been the case. They'd have gone public so much sooner. So the IPO market has changed, and this has contributed to the lack of potential leaders, names. The Russell is nearing a record drought, worse than the global financial crisis possibly. Hasn't reached that yet. This is a tweet by Jason Gepfert, sentiment trader, I think is his handle. Or that's his handle down below, but he focuses his forte is sentiment. And we're at almost 500 days. It looks like the global financial crisis was probably around 575 days, somewhere in that range. And so it seems likely that the Russell's not going to make a 52-week high in the next 70 days. So this would be the worst period. And this goes back all the way to 1980. So it's been really bad for smaller stocks. What's been good for the big stocks has been bad for the small stocks. I wish I had better news. Gosh, I just, there's nothing very bullish here. I guess what I will say that from a bullish standpoint is I think the market is a lot worse and has been in a bear market correction, whatever you want to call it. I don't care, for a long, long time. It's for much longer than everybody seems to think. And we'll pull up the Russell will be a good example. So let me do that. Resume the share. So we're all the way back to the top of well, even lower than that, where the COVID correction started. So since 2018, the Russell's gone nowhere. So it's been a long time. We're almost 2024. So 6 years of nothing. So that's 6 years where small stocks went nowhere. And so that's good. It creates a potential tremendous runway if they were to ever get their footing. What else is? Let's look at the S&P. And this is just relentless. You get a little bit of a balance, but just relentless. And pretty oversold, but one thing about oversold is if something's oversold and then it can't bounce, that's a really bad sign. Like I have a friend that uses DeMark indicators, and DeMark's countdowns like 13s for lows. I'm not saying that was a 13, but and highs. But he always says if it gives you a 13 and then it doesn't reverse, that's usually a sign that the trend is really strong in that direction. So it seems to me like the market's pretty oversold. I know David Ryan tweeted about it yesterday, and then today you tried to bounce, but you just was very feeble. Besides like Amazon and if Tesla was up a little bit, Nvidia was up a little bit, but just the banks got killed. I think Santa Fe SFI, I think is the ticker, got killed today. Maybe we'll pull up some of those. But if you can't bounce when it's oversold, that's a really, really bad sign. It just shows you that the trend is very powerful. And I don't know, it's just one day, but a very unimpressive rally today. Let's look at the S&P. I'm guessing the S&P was red or pink. Yeah, see, so the rest S&P made another low. And now that we're in a correction or whatever, so that because it's got to be over 10%. All right, so that's the indexes. Not a lot to do there. Good news is, unless you're trading the indexes, you just probably want to focus more on the stocks you own, the stocks you wish you owned. I think that tells a better story. There's very little that I wished I owned. For half a minute, I wished I owned VRT. I didn't own, into the earnings, and it was here for like 30 seconds, and then it was there in, minutes. Got halted. It went down so fast. As really bad sign, canary in the coal mine, so to speak, on kind of the market that you're in. That there's that much risk that quickly that the sell signal or the selling pressure overwhelmed the stock so bad that had to be halted. It's very unusual. All right, so before I get into stocks, is there anything I want to talk about in the indexes? Let's go to the industry groups. And let's sort this. So energy coal is 1, field services 2, hardware, SMCI, Dell is 3, royalty trust, oil and gas, you get the idea. Oil and gas, oil and gas, oil and gas. Security, computer software security tried for a little bit. Palo Alto tried, CrowdStrike tried, but the market kind of overwhelmed that group. So it's interesting that oil and gas royalty, look at the big move, 196.9 to 4. Energy coal has moved up the food chain. Retail supermarkets, no, I don't think I'd ever own anything there. 103.22 to 10. Pipeline, I do own some stocks in this group. I really like this group because the big earnings and sales, but you can see the group's 48, 31, 11. Frontline, Sting, TNK, TRMD. There's a lot of stocks. They're all kind of one and the same, but there's a lot of potential merchandise there. So I don't know. I don't know what I guess I can say is what's missing, right? Semiconductor, software database, software security is okay. It's not terrible, but this is mostly packed with energy. All right, so let's go to the stocks, and I've got a plethora of them and some ETFs too. Let's start with like the ETFs, so like gold. I don't know if anybody is interested in that. I have a love-hate relationship with gold. It's very difficult to trade. When it looks good, it tends to pull back. But what's interesting this time is that it hasn't pulled back, right? So you have powerful gaps again, goes through the pivot, pulls back, kind of does what it always does, but very within reason. That's very little. And look how it closes actually, practically on unchanged. You get a nice little support, and then up and up and up. Now I think there's news or rumors or whatever about the Israeli Hamas conflict. So gold is definitely going to be influenced by that. You've got the weekend, so influenced by the weekend, where if there's something drastic, people might run for one little bit of protection, so to speak, into the weekend. That can contribute to this, but overall, very constructive. You've got this double bottom, and I know Jim Ropels talked about the mother of all cups with handles. Uh, I've seen this before, and I think it right here, I was just like loaded up on gold, based on this pattern, and it worked for half a minute. This is a monthly chart, and then it did this, which is just kind of it takes the starch out of you. So I don't know. It looks very, very strong. We'll have to wait and see. Um, was it Santa Fe SFI? Is that the ticker? It's SNY, sorry. So I'm guessing earnings, French company, nasty, down 20% in one day. Medical ethical drugs, NVO and Lilly they're a little tired. It's below the 50-day, but considering the overall market, they're actually um, doing okay. Lilly, doing okay. So not great. Probably wish you'd sold this move up, but we always wish that, right? It's very difficult to guess perfectly. So this one, they're holding up okay, but that SNY was pretty nasty today. And you just had some, besides like the VRT, which isn't as bad considering, you gave back the gains, but not fun. But like here's Enphase and just relentless. This is a perfect example of what I'm talking about. When it's oversold and doesn't go up, you should be really nervous. Like oversold, can't go up. Down 9 weeks in a row, can't go up. That would make me very nervous from like, that's why Bill never believed in, overbought or oversold. Solar Edge, another one. So it was down 7 out of 8 weeks. How can it go down anymore? Hold my beer. 7 weeks in a row. How can it go down anymore? 30% more. So be careful if you think that way. Probably most of the time you're going to be right, but all it's going to take is one of these left tail events where you lose a tremendous amount to wipe away tons of gains doing other things. So overbought, oversold, trash bin for me. Anyways, if you can make it work, awesome. More power to you. But I just don't think in those terms. At least not where, like mean reversion. Yeah. If you force me to do a trade and you said XYZ is overbought or oversold, Scott, you must trade it. Okay. It's overbought, I'll buy it. If it's oversold, I'll sell it. Every time. Easy decision for me. Align, ALGN, nasty. And look, these are really bad charts. Like, let's go back to ENPH. I've never made money in ENPH. Why? Well, look how volatile it is. This is a 46% base. This one, a little bit better. But look at this nonsense. Now this base is okay. It's 29% double bottom, went up for 4 weeks, and then gave it all back. Is there anything here? This is a double bottom, really nasty. Honestly, you get stopped out. This cup with handle, you get stopped out. Hopefully you got stopped out. But you see how wide and loose these bars are? I always look at weekly charts and see what's going to happen if I buy a stock like this. I'm going to get stopped out. There's like an 80% probability I'm going to get stopped out. So I just don't even go with it. I just don't like that type of action. And there's too many other stocks to go with. How about Align? I mean, when's the last time it traded? Like, so here, if you go back way back here, it's actually in 2017. This is a leader, a TML, a model book stock. Look at how clean this is. Flat base. I know you got stopped out, but you get another chance right here on a 13% depth cup. 4 weeks tight, 3 weeks tight, 3 weeks tight. This is classic behavior, and you can hold and own something like this. These other charts are just awful. Now it kind of breaks out of nowhere, but I would say if it breaks out of a 4th week base and fails there's your sell signal if you happen to still be in it. So look at the weekly chart, and I'll just tell you from experience, for me, those wide bars, just avoid those stocks. There's no point to trading stuff like this that just does this from a canceling perspective, buying bases, etc. Now, you're a different type of trader. You like to buy the bottom of the base and sell the top. I don't know what that means or how to do it, but if you can do it, great. But I'll just tell you from a kind of a classic standpoint, this is slop. This is terrible. Avoid those stocks. All right. Let's look at some of the leaders. So Microsoft, not great action. I think this is a little double bottomish. I think you can qualify that as a double bottom. And so for me, I wouldn't be interested until it can get back above like 340. I'm going to turn my camera off too. I know sometimes it covers the chart. Tesla, full disclosure, I am short Tesla. I don't know. I think from whether you want to short it or not, that's entirely up to you. You figure that out. But I don't know if it's a buy. I would wait. It looks broken to me. The relative strength is not that great. Look at the weekly. For me, it would just, if I wasn't shorted, I would say it's just an avoid. Nvidia. So Nvidia is interesting. I think it's the best, or was the best, or is the best stock in the market, and not acting well. I've seen the Head and Shoulders top talk. I don't know. I don't know what the rule is for how long. It sure seems to be pretty short to be a Head and Shoulders top. I would not short Nvidia. What's the point? There's so many other stocks out there acting so much worse that are better shorts. Now, if you like the speed of Nvidia and you like to trade, I could see where you might be interested in it, but it just seems like the risk reward for something like Nvidia is not worth it, I don't think. But going back to, look how it trades. Tight, 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 tight. This, you want to buy stocks like that. Breaks out, tight, 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 just sitting there, tight, tight, tight. And it's gotten a little bit looser. The market's not great. So you have to understand that it's undercut these lows a little bit. I don't own Nvidia, and like I said, I don't have any desire to short it. It's just kind of a watch for me. I would love to own it again, because that probably means the market's okay, and it would be one of the first stocks I would go back to if I thought the market was okay. Today, Deckers tried to break out. Very strong action, really good quarter. This is quite a company. It's done so well for so long. Tough trading stock, down at the bottom of the base. Now it's up at the top. Let's go to the weekly. You could say this is SUFB straight up from the bottom, or you could say that's real power. Look at the power of that stock. Straight up from the bottom on a 15% base is probably not all that bad, but I don't know. In an environment like this, it would just be a watch. I would be curious on how it acts. ANF is acting really well. Like if you still held ANF, I couldn't fault you for that at all. PDD. So I haven't owned this one in a while. I've been watching and stalking, and it's holding up really, really well. I don't know where or how I would buy it, but interesting. This looks to me like if the market were to right itself, it's exhibiting leadership characteristics. It is Chinese though, right? So you have to build that into your model. Amazon today gapped up, really good quarter. Not much to the chart. It's probably too short to be a double bottom, I think. And just so far it's kind of masked the weakness in the market because Amazon was up. And Google. So, was one of the leaders. Now it isn't. It's the way the market works. Apple. Total avoid. No, thank you. There's nothing to do there. And then the group that's I talked about like Frontline just beating its chest, doing nothing wrong. TNK, uh, this is if you're looking for, if you've ever heard David Ryan talk about the ants, up 12 of 15 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. It looks like are there 3 down days? Yeah. So it looks like it's exactly that, 12 of 15 days to trigger kind of that ants rule. And why this group? I don't know. We'll look at the big earnings and sales and the relative strength and the group strength. So I do own TNK. I do own Frontline. Sting broke out today. I didn't buy it. I'm tempted. Broke out on the weekly chart. But it's like, how much, exposure do I want in this group? DHT is another one that's holding up really well if you like yield. This one has a big yield. Some of the others, I don't think Sting pays a yield. And then is there another one last but not least? TRMD. I don't own any longer, but it's done nothing wrong. I just felt like I had a little bit too much exposure in that group, so I sold this one for, I didn't make a ton, but considering what the market was doing. Okay, so I think that's it for the stocks. Let's go to the quote of the week. And we're gonna I think this is gonna be a record 2, 4, 5 words for the quote of the week. It's from Howard Marks of Oak Tree Capital. Cut off the bottom tail or the left tail. So a distribution curve, a natural distribution curve of your trading results is probably going to be a lot of stuff in between -5, +5, +10, -6, +20 right in here. And maybe you have a handful of outsized gains. Maybe you have an Apple or Nvidia or something like that. And then you have a handful of outsized losers. Maybe you owned a line or something and gave back all the gains and then some, something like that. That would be your left tail. And if you need to have some right tail events to pay for some left tail events. It's impossible to avoid all the left tail events, especially like if you're going to hold into earnings. That's usually where that might happen, but not always. Company could come out and warn. And I think one of the easiest ways, I think, at least to perform is to cut off that left tail. So I tend to not have too many right tail events because, I'm going to peel off some of the stock as it's moving in my way. Maybe I'll get a VRT or something once in a while where I just get conviction, hold through earnings, and then it jumps a lot. That would be a right tail event for me. But they don't happen all that often. But I combat that with this left tail. I just do everything I can to avoid big left tail events. So if something's not acting well, it's not going in my favor, I'm going to get out or I'm going to reduce at a minimum. So think about which in your distribution curve of trading, where you can win with either one. You can win with outsized gains, like the Motley Fool approach, so to speak, where you have 20 stocks and you have one of them's Nvidia. 19 of them could be Fitbit, which went down 70%. Ain't gonna matter. Nvidia is gonna pay for that. Really hard psychologically, I think, to do it that way, but it's not impossible. That's a way that you could do it, because you have to be wrong so often. And then what if you don't have Nvidia? So what if you have 20 of them? You got to go the next 20 to make that happen. That's going to be really hard not to give up. I know there was a fund manager, I was listening to a podcast. His CAGR, his compound annual growth rate, CAGR for CAGR for short, was 35% over a 10-year period. The first 6 years, he was flat, no return for 6 years. The next 4, I guess he went up tenfold or whatever the math is, because he had a big position in a single name or something. I think it's Ted Wexler. He's I think he runs money under the Buffett family, so to speak. Now he's like one of the guys in line. Anyways, so it's 6 years, no returns, zero flat. 4 years, knocks it out of the park. His CAGR is 35%. He's a hero. He's an amazing money manager. But I would say that most people wouldn't survive 6 years of zero returns. They'd give up. They'd lose faith. I have a friend who runs a hedge fund, and he had a guy give him money, and in the first quarter, the guy gave him money. He was down 5%. The guy took the money. He says, "You were only with me for one quarter." And he goes, "Yeah, I just couldn't stomach. I couldn't stomach it being down." The next quarter, he was up 20%. And this guy did not participate in that. He was out at -5, and so he has a bad taste in his mouth, right? He lost 5%, whereas the people that stuck it out are actually up. So I think the easier way psychologically is to cut off that left tail, keep the losses small, just grind and grind and grind. And it's frustrating when you leave $1 million on the table in Apple. I can tell the story a million times of where I first bought Apple, how many shares I had, millions in profits. But I didn't know it was Apple at the time in 2004. How could I have known what Apple was going to do? So it's just not realistic to think that way. All right. Thank you, guys. Have a great weekend. MarketSmith@investors.com, 800-424-9033. Next week, Arnie and Harold will do Stay in Step on Thursday. So I will have Friday off, barring something, really strange happen. Maybe a follow-through day and a change in the market. Unlikely, but I'm open to any possibility. Have a great weekend, everybody. Bye-bye.